Sometimes that's happened.
You gotta love these off-the-cuff moments, folks. Give me a second. Let me make sure that we are streaming live on all the various platforms. I am excited because I have not done one of these with Mr. Will Rhind in the last couple weeks since he's been traveling. We were supposed to get Mr. Bill Gunderson here. Hopefully he still joins, but I think he's having some technical difficulties. Bill, find somebody to help you if you happen to be watching this. We're more than happy to have you come on if you can step in. For those that are watching this live, if you have any questions or you want to engage in any way, whether you're watching on YouTube, X, LinkedIn, we can see your comments, so don't hesitate. We want to make this as interactive as possible. And yes, this is going to be very much an off-the-cuff conversation because we were supposed to have Bill Gunderson, but we got Mr. Will Rhind, obviously. My name is Michael Gayed. This is the High Conviction Podcast by GraniteShares. We have been gradually releasing some of the prior videos in a nicely edited format on the youtube.com/@GraniteShares link handle. Make sure you subscribe to that channel as we keep putting out more and more content, and we're going to be putting a lot of content in the weeks and months ahead. Will, what's going on, man?
All good. As we just started to say, kind of off camera, 44 trading days now to the end of the year, which doesn't sound like a lot, does it?
It's like that old saying, right? The older you get, the faster time goes. Right. I was not aware of that, but it's like, I guess I got to start worrying about Christmas commercials coming up now, 44 days out in time. And also this little thing called an election, which apparently is like in a week or so, from what I hear.
That's right. Yeah, apparently. And the shares, obviously, of DJT, which is Trump's social media stock, soaring today on the back of the Madison Square Garden rally that happened last night here in New York City. So leaving aside the polls for a second, if you are looking at markets are telling you that they're expecting a Trump victory. What do you think about that?
Yeah, I mean, it certainly does look at it that way. So I've made this point that typically when you have a Republican president, tech still does well, but tends to not be the leader. Whereas when you have Democrats in office, typically tech really is the big time leader, right? Relative to other sectors. It's just historically speaking. And when did the broader tech outside of the AI, NVIDIA type names, start to kind of peak out relative to the broader market? It was July. Right? And that's when the odds started favoring Trump. So it does seem like, I think Druckenmiller made this point as well, that the market is anticipating a Trump win. Although I got to say, it's amazing to me that it seems one part of the media says Trump's going to win, and it's overwhelming when you look at the predicting odds. And then I was just looking at some mainstream media, and the headline was Harris leads by 4 points in a new national poll. And it's like, I don't know if we ever really know what the real truth is as far as what the numbers show.
Yeah. Well, I think that's what's kind of interesting about the markets, is because markets, at least you would hope there's skin in the game.
Right, exactly.
In terms of, there's betting markets and then there's real, financial markets. And I think the challenge with polling is obviously people don't have to tell the truth. And, depending on what they might want you to hear, or, just decide not to disclose that information, then you can get different results. Of course, the polling, remember, if you go all the way back to 2016, it said that Trump had no chance, and then clearly that was completely wrong. And there've been several examples of this around the world where polling is going completely wildly off.
Yeah. This point about the DJT, though, I think is interesting because it kind of goes into a thing we can riff on, which is the power of retail to move stock. Because clearly this is not based on financial advisors or institutions. This is just, people that are maybe hardcore Trump fans that are like, you know what, I'm going to express my belief in Trump by buying this ticker. Not necessarily a new phenomenon, but certainly amplified nowadays.
Yeah, and maybe another thing is, I wonder if there's some potential, like obviously we've got to get to the election, and we would have to win, obviously, but there's some kind of collaboration between him and Musk, given, that's more than just the sort of, the housekeeping, administrative stuff, efficiency roles that have been talked about, but something to do with the Truth Social and X itself. That could be interesting.
So, okay, that's actually a good direction, because obviously Tesla had a pretty monster move, right, not too long ago. Do you think that? Yeah, right. I mean, it was pretty remarkable. The do you think this sort of this buddiness that Musk has going on with Trump, that this is just another reason why Tesla stock is going to keep pushing higher and higher? I mean, I'm seeing some interesting comparisons of Tesla to Nvidia years ago.
Well, I think the really interesting question is why, or what's in it for Elon?
Yeah.
And I think that to a certain degree, that's kind of the key question around all of this. That leaving aside the politics, what's really in it for him? And I think one of the things that has to be on the table is Tesla's full self-driving and autonomy. And in an environment or in a world where a Trump administration would potentially deregulate, that might be the moment that becomes a reality.
Yeah, I think that's what's so interesting about the way that things are set up. Pivoting a little bit, you were just in Europe, right, or the UK? Although you corrected me saying UK, Europe, not exactly the same in that sense. What was going on overseas?
Yeah, I was in London for a few days. So as you know, we have business in the UK and other European markets. So checking out on things over there, and again in the UK, kind of getting a pulse as check as to what's going on. There's a very big event in UK politics happening this week, which is the release of the budget, which, I think with the new Labour government in, there's a lot of speculation around the sort of tax rises that may be at play there. So I think, it's really a question of, what sort of negativity, comes out of that. But I think leaving that aside, the mood in London, I felt was generally pretty good. And people are sort of resigned in some respects to this idea that taxes especially going to go up, but for investors, most importantly, it's capital gains taxes most likely. So we've seen quite a lot of activity in terms of UK, for example, companies, directors, selling stock, trying to sort of push this forward before any kind of tax rises come in. But again, as aside from that, I think things are generally okay.
Is the retail activity rising in London, in Europe more broadly? I mean, obviously, it's been a tremendous phenomenon post-COVID in the US. Do we see similar dynamics overseas?
Yes, but not the same. So I think it's fair to say that retail investing as a phenomenon is happening almost all over the world. And it's just some countries are more sort of advanced at this than others. It's certainly happening in the UK, it's certainly happening in Europe, but I think it's a long way behind, obviously the market leader, which is what's happening here in the US. And certain Asian countries, but definitely something that I think is that there's a lot of different sort of explanations for this, but it's a combination of access to markets and improving financial literacy overall. I think with the advent of the internet and advent of fintech applications, making it easier for people to access markets and manage their finances. And I think the other thing is that some of the perhaps more traditional investment avenues are just not as accessible as they once were. So specifically, I'm talking about real estate or home ownership. That for young people that are entering the workforce today, the cost of buying a house, buying an apartment, or whatever, is all-time highs relative to where it's been kind of in the past. And so the idea that you can save for a few years of working and then buy something, for a lot of people, that's not as realistic as perhaps it was, even 20 years ago. So therefore, how do you build wealth if you're somebody who's just starting your career or somebody who's, in their 20s, early 30s? I think increasingly people are coming to the realization that really has to be the market, that there really is no other alternative. And as people are sort of figuring this out, sooner and sooner they're realizing that the access is there. It's easy to do that, but that's a really the practical option in terms of how you build wealth from an early stage.
And actually, we've got Keenan Grace coming up, who's going to be talking about that. He's got a pretty big YouTube following, and one of these guys that seems to have built a successful nest egg, right, from investing and trading. We're going to touch on that at 3 Eastern. The retail side, though, let's go back to that end of things. Are they primarily gravitating towards stocks in their home countries, or are they playing the Nvidias? Are they playing the U.S. market more than their own markets?
I think that it's a bit of both, and again, there'll always be the sort of edge cases. But from what I've seen, of my own experience, it's more about the global tech stocks than anything else. It's not to say that people aren't investing locally. It's just that in a lot of cases, returns from local markets have not been great, and therefore that's caused people to think about where else to get return. And the US market, as we know, has performed exceptionally well over the last decade or so. And the standout performers in the US market have been the large tech companies. And really, it's the case that everybody knows these companies. They're brands, they're companies that people interact with, in some cases on a daily basis in some of the companies. So I think it's something that's well known. The performance is there, and regardless of sort of almost where you are in the world, your first move is really to kind of put these companies in the portfolio. And that's from my experience when I go to markets all around the world, and sometimes if I talk to brokers about what stocks are the most popular, typically you're going to find those stocks, the Teslas, the Apples, the Nvidias in the portfolio, and it's quite universal. There will be obviously some differences, but for the most part, I think if you had to overgeneralize, these are the stocks that people are owning.
And these have become the household names in no matter what language you speak. I think it's kind of the real interesting thing. It's hard to see how you can unseat that popularity aspect from some of these companies against every other person that now is entering the investing field from all parts of the world.
Yeah, it may seem like that, but I think again you got to be a little bit sort of take a step back and realize that it's logical that people are there because the performance is there. But if that changes, markets evolve, people's perceptions evolve. There'll be other stocks that people will be interested in. But I think for as long as those stocks can remain dominant and put in the kind of investment returns that are attracting people, then they'll continue to attract capital. And that's why, certainly if you look at some of these mega themes, they don't really show much sign of slowing down. So whether you're talking about AI, which has been by far and away probably the most important theme of this year, that doesn't really show any signs of slowing down. And if anything, it's accelerating. Demand is accelerating, and people are looking for as many ways as they can to sort of get that exposure.
I see Bill Gunderson has joined, but Bill, if you can hear me, your camera doesn't seem to be on. So try to allow that on your platform. We are live, and we're going to try to get Bill in here shortly. So hopefully Bill can hear me. I will try to message him as we're chatting. Okay, now you've got a front row seat as an issuer, obviously, with GraniteShares in terms of seeing what other people are gravitating towards, aside from the more popular names that people hear about, like Tesla and Nvidia. Palantir's getting a lot of buzz, obviously, lately. What are some of the companies that you're seeing there's more and more interest or intrigue in?
It's certainly for this year, and I would say up until last week, it was really all about AI and crypto. So the two sort of big themes for this year: AI, we know about; crypto, obviously, some of the companies there, the Coinbases, the MicroStrategies, etc., getting a lot of interest. And then, of course, that huge bump we saw after Tesla Q3 earnings means that perhaps now the EV market or the EV stocks are back in play in a way that they've been kind of counted out this year. So we saw that massive rally after Tesla's Q3 earnings, and maybe that's now starting with huge results from GM as well, although it was not not necessarily EV focused, but with signs that maybe the Chinese market has turned a corner and demand come back in there, Tesla's margins improving, that maybe that starts to get people excited again in terms of EVs. And it seems certainly since the Q3 that the rally in Tesla's continued. It wasn't just a one-off. So that'd be interesting to watch and see if that sustained into year end.
I know on the GraniteShares Substack, there's been some writings on China and potential for a long-term strength there. Baba got ahead a pretty big move, right? And I talked to a lot of advisors. A lot of advisors, actually really like the story there, and it's been a laggard, as we know. Is there a case to be made for that sort of as a unique play on a China recovery?
Yeah, I mean, I think if you're looking for stocks, I mean, so many of these stocks have disappointed, but similar to the Magnificent Seven argument, when you look at the most well-known brands or stocks in China, then Alibaba is one that stands out. So it's a stock that trades somewhere around half the PE of an Amazon, etc. And for a good reason. And I think most people will know the Chinese economy has been going through a tough time. But with things looking like potentially they're starting to turn around, if people are looking for value investments or just exposure to China, and particularly to China tech, then Baba is certainly something that is worth a consideration. So I think that will largely be one of the bellwether stocks in terms of people's sentiment around China more broadly, and Chinese tech especially. So that a huge move up, came down obviously after the initial sort of, hype or enthusiasm around it. But we'll see clearly if we start to build some momentum, here into year end or indeed next year more broadly.
It looks like we got Bill Gunderson here. Bill, can you hear me?
Yes, I can. How you doing?
We finally made it. We were riffing.
Yes.
Well, welcome, everyone. This is Bill Gunderson, the guy who was originally supposed to be coming here. All right, so Bill, listen, I was telling Will, he asked me before the show, Bill? I said, no, but I've seen your content for the longest time. So I feel like we should start with some intros. So tell us just about yourself, your background, what do you do?
Well, I've been in this business for 25 years, and I've been a professional money manager for 25 years. I started out as a momentum investor. I saw the NASDAQ get hit for 79% back in 2000. I learned a lot about value investing, and I eventually came to the conclusion that you need both together in a stock. I started my own company in 2006. I have my own national radio show that I've done for the last 25 years. I'm in about 10 markets right now across America, from Sarasota over to San Francisco and a lot of points in between. And I'm also, I manage money. I'm a fee-based only money manager.
You're a big fan of disruptive tech from what I've saw from that direct message.
Well, look, over the years, I've seen the computer revolution. I've seen the telephone revolution. I've seen the networking revolution. Now we're into the automobile revolution, the AI revolution, and there's always leaders and there's always laggards. Now we're even getting into a nuclear energy revolution, and new leaders are starting to emerge there. And I like to be invested in the disruptors, obviously, and not the disrupted. I'm not a fan. I call them soggy stocks. You take a Kimberly-Clark, for instance. Like stodgy old growth giants of yesteryear, single-digit growth, 3-4%. That's not my style, and yet that's the pervasive style on Wall Street. It seems like I would rather have the stocks of today. I write a newsletter every week called Best Stocks Now. I invented my own app, which ranks 5,500 stocks every day. And it's tilted towards momentum and it's tilted towards valuation, those two coming together. And it really narrows down the list of stocks that I have to look at on a daily basis.
So maybe just to level set, Bill, give us some examples of stocks that mix that momentum and value together.
Well, you'd be surprised. I mean, over the years, a lot of them come from all different industries. Okay. Right now, today, some examples, you look at NVIDIA, which is very surprising that the kind of growth it has, it doesn't really trade at that big of a forward PE ratio. I
Right.
do 5-year valuations. I learned that from some money managers, hedge fund managers in the Bay Area many years ago. I have a 5-year valuation on NVIDIA, double from where it's at now, and that's just using 20% growth. On the other hand, you take an Apple, I can only see about 50% upside potential over the next 5 years because you've got such anemic growth right now. And I don't think the growth is coming back anytime soon. So I guess you would call them GARP, growth at a reasonable price. Lilly's a very good example. Look at how fast Lilly is growing. That could be the biggest drug of all time. And the stock is not that expensive. It's pretty cheap from a forward PE ratio. And you compare that with a Pfizer or some of these other drug stocks that are just dead in the water. They have nothing in their pipeline. So that's what I'm talking about. Lots of examples. And, I can think of over the years, Priceline.com was one of the great stocks of all time. Align Dental, when they came up with the Invisalign. We have a wall of fame, we call it, of big winners that we found over the years.
Very, very random, a very random point, but somebody once told me, speaking of Priceline, that William Shatner made more money from the Priceline stock that he was given to do the commercials than he did in his entire acting career. Did you hear that?
You probably heard that from me or Phil. I used to say that all the time, how he made more money. That's one of the greatest stocks of all time. And yes, he did. He made more money from his options and being their spokesman than he made his whole career on Star Trek, right?
Amazing. We were just talking, just before you came on, we were talking about Tesla.
Okay.
And we were talking about the clearly huge pop that Tesla had after the Q3 earnings. And we were debating whether that is the sign of, or the start of a Tesla turnaround. Do you have any view on that?
Well, number one, I don't own it right now, and I haven't for about a year or so. I don't like that the growth just totally leveled off. I mean, you look at their last 4 quarters, not counting this most recent one, they've been a non-growth company, really, for the last 4 quarters. You have all of that competition now that he didn't have before, and I'm namely China. Boyd manufactures 4 million cars a year now. He does 1 million cars a year. He's not the biggest maker anymore. And I think that the end buyer, the consumer, is having a hard time with buying electric cars. So I wonder how much of that move on, was it Wednesday? Was it Thursday? How much of it was short covering? There had to have been a lot of short covering for it to go up 22%. But to your point, maybe that was an inflection point. That's his first quarter of growth, right? In a long time. He had 8% sales growth. He had 9% earnings growth. That's still single digits. But I just don't know that, he has the pipeline in place to become a 20, 30% grower anymore. It seems to me that's going to take the autonomous car, the robo-taxi, something like that. So the jury's still out on Tesla in my book.
Yeah, I think part of the big growth numbers that he put up for next year was really all about the so-called lower cost, Tesla.
Yes. I mean, that's going to have to come from margins, right? His margins improved considerably.
Yeah.
But yeah, he threw out some pretty big growth numbers, which he's known to do. Maybe that's a lawsuit down the road someday. But yeah, I mean, I'm a little doubtful about those growth numbers that he threw out. So look, I have 25 spots in each of the 5 portfolios that I manage, maybe 20 spots. Like a World Series team or an All-Star team. I want the very best on the field at any point in time. Tesla would not be one of those stocks taking up one of those valuable spots right now in my portfolios.
And what would, you maybe already kind of hinted at this, but what would it have to do for it to gain one of those spots?
Well, I use a very simple valuation formula. You begin with next year's earnings estimates, which I think they're going up a little bit. Before the results, I think they were at 344 or something like that, and they've gone up a few cents. Okay, so you begin with that. Then you plug in the growth rate, and I'm using like 10 right now. You extrapolate that out over the next 5 years, you put a multiple on it. I come up with 55% upside potential over the next 5 years, given what we know now. So obviously, two things can change in that formula, and I've been talking about this on my radio show. I think the earnings estimates for next year are going to creep up, but not significantly. It's the growth rate. The growth rate is what would really impact Tesla going forward. It's got to go from 8, 9, 10. It's got to go back up to 15 to 20 for it to make sense from a valuation and upside potential point of view. I have to have 80% upside potential or better. Usually it's more like 100%. Tesla comes in at 55% right now.
We're saying, is there another thing we're not thinking about with the election? So let's say, hypothetically, Donald Trump wins the presidency. Given everything that's sort of been happening with Elon and the Trump administration, is there something there that could help Tesla?
Well, there is one. Yes, there's one that he's been talking about, and that's a totally tax-deductible auto loan. That would help the whole industry, but it wouldn't specifically help him, Tesla. It would specifically help the entire industry. I think that's a good idea for our automobile industry, and obviously keeping the Chinese cars out, which they would have humongous tariffs. I don't think they'll ever be let into America, but I don't see the catalyst I would be looking for is the robo-taxi, right? And the autonomous. We haven't really yet broke. I ordered dinner the other day, and it comes in a Uber car, but I can see the day when a robo-taxi shows up in front of my door, and maybe a humanoid robot brings my dinner to me. Yep. We're not there yet, though, but that would be a major breakthrough.
But are we there yet? And the key is the deregulation aspect, or you think we're not there yet, and the deregulation is kind of a secondary point?
I don't think the autonomous technology is there yet, right? They're still having people getting run over in Phoenix, and they're testing these cars out, but we have not cracked that barrier yet where you're going to go out and see autonomous robo-taxis wherever you look, right? But I think the time is coming. I think that will look one day. We talked about AI forever, and then one day Microsoft said we have ChatGPT. And I would say that was GPT. That was the very first shot fired across the bow that AI is here. And then NVIDIA had those blowout earnings, 4 quarters in a row of triple digit, probably the best 4 quarters I've ever seen strung together in my lifetime in the business. And all of a sudden AI is here. And, there's all these wannabes and players. We know that Apple, they dropped their license for robotaxi in California. So they're out of the race completely. So now it's down to Google, it's down to Uber, it's down to Tesla, and then some other wannabes, some smaller companies. But we just haven't broke that barrier yet.
You mentioned 25 slots, and this is the High Conviction Podcast. Obviously, you believe in putting some conviction out there. What causes you to get rid of one of those positions?
To what now? To
get rid of one of those positions.
Oh, I got rid of one. I got rid of one on Friday. Not that it was a disruptor, but it just is best of class. They do very well. I've owned American Express in my dividend portfolio. A lot of people are so focused on dividends. Michael, you're on Seeking Alpha. The dividend guys have taken over that website. It's just ridiculous.
It's unbelievable. Yes.
Okay. So I can point to you an 11% dividend yield. My app calculates what the total return has been over the last 10 years. You take like agency, which is a mortgage REIT, you're getting 2 or 3% a year at best over that. and you're getting a 12% dividend. That means you're basically getting your own money back. Your principal it's a terrible philosophy to invest in high dividend yield. American Express, on the other hand, pays a small dividend, which, by the way, NVIDIA pays a small dividend. It's in my dividend portfolio. You want growth, and a little dividend along the way is good. So I got rid of American Express because I felt like, I made a lot of money in it, and I just feel like with the election coming up, I have taken some money off the table. I'm at 30% cash. I want to see a resolution next Tuesday. I think there's a lot of questions between now and next Tuesday and after next Tuesday, right? So I currently have about 30% in cash. That was one I chose to sell. And I also have some inverse ETFs in place. Now, I was going to ask Will, do you have any inverse ETFs, or is it mostly the leveraged individual stock ETFs?
Yeah, we have both inverse and levered inverse.
Okay.
For us, I mean, they are on single stocks. So
okay,
an example would be we have an inverse on a stock like Coinbase.
Yes.
Where there's no leverage, it's just providing an inverse.
Yes.
And then we have levered inverse on stocks like NVIDIA or Tesla. And that's probably more of a function of the availability of margin than anything else.
Yeah.
And so some stocks you can provide that leverage, other ones you can't. So it just really depends on the volatility of the underlying. But yes, we have a mix of both.
I've been involved with pro funds. I started using pro funds maybe 20 years ago. Their rep visited my office, and they were using pro funds inside of variable annuities at that time. And I've used them. I inverse the NASDAQ right now, okay, just as a hedge.
Yeah.
I have a 5% position and inverse the entire NASDAQ because I feel like if something crazy should happen during this election season, that's a good hedge. I have TWM, which is double inverse the small caps, because the way interest rates have shot up here, that's not good for small caps. And they're vulnerable if we have any kind of election, trouble or, who knows, civil unrest, who knows. And I have inverse the S&P 500. So, but I do like the concept of having individual stocks like you do to inverse, because you can't do that in an IRA, right?
Yeah.
You can't inverse an individual stock. You have to do it through an So I just do it through indexes as opposed to individual stocks.
Yeah, interesting. But you got a few there on, because you covered the major, for all intents and purposes, the major stock indices there in terms of
investment. Well, look, you can do Europe, right, which is vulnerable. EPV is inverse Europe. You can do the emerging markets, EUM. You can do inverse China, Yang. You can do Yin or Yang. Yin is long. I personally have a little inverse on China. I mean, you talked about it. Who was it today that said, there's some company down 17% today because of China's economy? One of the big companies that has reported earnings. It's not good. Their economy is not good right now.
Yeah, we were talking about that a little bit just before you came on. With that, do you think it is a bit of a dead cat bounce that we saw in China, or do you think they are starting a turnaround? I
heard your comments on China.
Yeah.
And, I've been burnt too many times.
Right.
Alibaba, for instance, was one of the great stocks of all time. Jack Ma disappears. You have that extra level of political risk. And look, no matter where you sit politically, China did a hard left turn when Xi came in. And, I've been burned a few times. I've owned PDD, which is, their Amazon pretty much. That's about the only one I would own. I watched their version of Starbucks, Luckin Coffee, totally blow up. And it's like getting a bad meal at a restaurant. I just don't know that I want to go back to that restaurant anymore. I have a hard time investing in China.
I think, by the way, that they call that the snake bite effect. from a behavioral finance perspective, once bitten,
Yes.
twice shy, right? It's like, it's true. There are a lot of people that have been bitten by China, right? And
Big
it's
time.
afraid, right? It's like whipsaw after whipsaw after
Yes.
whipsaw, and fake out after fake out. I wonder, it's like at some point it'll move, right?
Well, I mean, you had the guy that owns the North Carolina Panthers. What's his name? You know, yeah. He said, buy everything China 2 weeks ago. The day he said it, I mean, it was up big time. It went up about 30% in 3 days. Now it's all settled back down to where it was. And I think it's another head fake myself. I'm not going to go running in and sell my NVIDIA and replace it with Pinduoduo, you know, PDD. I just don't feel that comfortable with it. We have a fiduciary responsibility too as investment advisors, and that comes into play a little bit also. I just don't know that I trust it.
Let's maybe switch gears. I want to pick up on a comment you made about dividend investing and seeking alpha. Well, just why is it that people are so obsessed with dividends, in your opinion? And kind of is that always been the case, or is this a more recent phenomenon?
I think there's certain writers on there that are playing on people's stupidity, to be blunt. And I think when you put up, buy this dividend yield of 15% and swim in dividends the rest of your life and retire with mega yachts and whatnot. Well, yeah, I mean, look, if I could have 15% a year guaranteed, that sounds pretty good.
Right.
Buy about 10 of these. Those are the most volatile, high-risk stocks in the market. I once sat down with a retiree. He lived on a golf course. His wife called me in to come visit her husband. He had $1 million in retirement. It had gone down to 300,000. And I looked at his portfolio, and it was all the pipeline, all these double-digit dividend payers. And he said to me, what do I care about the principal? I'm getting my dividends. That's just stupidity, okay? And so I think they're sucked in. I think they're probably new investors, or they're looking to get rich quickly or whatever, and saying, yeah, I can get a 15, 17% dividend yield. Why do I need to buy a stock and take the risk? But most of those stocks go down 60 or 70% in value. They're, agency. I looked at agency. I just wrote a scathing article about agency on Seeking Alpha. And Michael, the dividend army came after me. Oh, they team up on you. Oh, how dare you.
The trolls are bad on X, but on Seeking Alpha, they can be way worse. They all think they're very smart, right?
They got my article removed from the site because I said there was credit risk in agency. I said,
don't get me started on credit risk. I've been wrong on that, and I got attacked like crazy.
They said there's no credit risk. Those are government backed. Well, then what happened in 2008, 2009, right? With all.
Yeah.
So anyways, I think it's smoke and mirrors is what it is. You attract, these guys are looking to get clicks on their articles. And one guy, he takes in $4 million a year from subscribers. And his only criteria is the dividend, the highest dividends. Okay. And I have a problem. I mean, I think Seeking Alpha's lost a lot of credibility. And I know they've lost a lot of viewership. They're crying all the time about losing subscribers. And I think that's the reason why too. You buy those high dividends and the next day it's down 8 or 9%. There goes your whole dividend for the year, right?
Thankfully, GraniteShares' audience is on the up and up.
I'm sure there's more intelligent investors there.
Yeah. It's just an interesting phenomenon, though, this idea of the high dividends and people being seduced by that, I suppose. Just the dividend alone, not the concept of total return.
Yeah, I mean, absolutely. And it's mostly mortgage REITs, pipeline, very volatile stuff.
Yeah. Makes sense.
So, Bill, I didn't want to have you back on. We only have a minute or two left.
Okay.
Here. But other sort of interesting up and coming disruptive names that you're paying attention to. maybe drop a few and then we can hit on them. For
well, you know, I mean, this nuclear thing I think is real.
Yeah.
I was at the No Nukes concert 20 years ago when everybody was against nukes. Now you got SMR and you've got OKLO, OKLO. Today, a stock popped up on my screen that makes the fuel for OKLO and SMR. What's the symbol? I'll have to look it up during the break, but I talked about it on my show this morning. And that stock is like 6, 7. All of a sudden, it's starting to take off on big volume. I think there's something to that. Now, another utility came out and said, you know, we don't want to get involved in this. But look at the money these tech stocks are throwing at nuclear to run their data centers, right? So I see something there.
That's I think a good place to wrap up, Will. So I'm glad we did this. We riffed, you and I, and then we got Bill in last minute here. So we will have this as an edited podcast under the High Conviction podcast name under YouTube. And hopefully we'll have Mr. Bill Gunderson back on. And I think we'll do an earlier start time just in case.
Yeah, I had 1 o'clock on my calendar somehow.
Oh, no.
I guess I messed up, but that's what I thought. Eastern time. I'm on the East Coast.
All good.
All right.
Thank you, Bill.
Okay.
Yeah, thank you, Bill.
Take care.
Pleasure.
Okay.
Cheers, everybody.
Thank you. Cheers.